Welcome to this video where I'm going to do a quick run through my portfolio as at the end of October. It's been a bit of a bloody month, quite a lot of red showing across lots of different indices and lots of different stocks. Let's just have a quick look and see how bad it's been for some of them. If we start off with the S&P 500, the US's 500 top stocks, that's down almost 3% over the last month. We're then looking at the Nasdaq, so this has got all those big tech companies in it. It's down almost 4% over the last month. The USA taking a bit of a lead from the pair of those, saying it's made up of lots of the companies that sit across those two indices, and that's down just under 3%. The UK slightly better at about 2.3% down, and my biggest holding that I have is currently down 5.65%. Let's jump over and have a quick look at what's on the Trading 212 app. So we're looking at how are things looking with my portfolio. If we look back over the last month or so, we can see that I have at stages been down almost 5%. So I suppose I've got to be relatively happy with the fact that I am just down at the moment about 4% across the whole portfolio, and that's just over £1,000 down on the 26,500 that I have invested in here. I still have this all set up the same way that I have done in the past. I have my daily and monthly DCA pies. I also have a bit of a growth pie, so I'm starting to look at a couple of growth plays coming in here, and on this growth play I've actually only got Rolls-Royce in here at the moment, and that is just something that I'm going to continually start trickling into over time. So the daily DCA, the monthly DCA and the Own the World are all made up of these four different ETFs, or Vanguard ETFs, one looking at the US, one looking at emerging markets, one the UK, and then one developed Europe ex-UK. And the whole reason I've put this one together, if you've been watching me, is to try and replicate the FTSE All World that Vanguard have, and that basically has a 0.22% ongoing charge, whereas built up the way that I have this weighted at 65% to the US, 15% to the emerging markets, and then 10% to the other two markets, gives me an ongoing charge of only 0.1%. So that's just a little bit more money coming into my pocket. Over the next month, I'm going to do the daily DCA versus the monthly DCA, and at the moment the daily DCA is winning. That wasn't quite the case when everything went on a bit of a rally earlier on in the month, where we ended up seeing that monthly DCA pie streak ahead and almost have me breaking even. Within this monthly dividend portfolio, I have just over 21,000 invested, and I suppose this is one of those things that everybody always says to you, potentially just better off investing into an ETF, just set and forget and leave it there. And that's basically what I am doing with that Own the World and the DCA pies. Within this pie I have 20 different stocks in here, and this will show you those in my largest holdings. Realty Income, I continue to keep buying into this one. I have done a video which should be up there somewhere, which talks you through why I still believe that this is something worth investing into. And it took a bit of a hit yesterday where it dropped by about 5-6% on the news that it was going to buy Spirit Realty. I'm going to do a video on that in the next few days, so I'll just cover off my thoughts on that. But I bought another 25 shares yesterday, so that might give you an idea of where I think we are with Realty Income. I've got iShares UK Dividend, so IUKD. Done a video on that as well recently if you want to go and check that one out. It's down about 2.8% at the moment, and then BAT's British American Tobacco coming in at 4% down. You will see the common trend throughout this portfolio that quite a few things are down at the moment. I'm not worried about that. I'm investing in these for the long term. They are continually paying out dividends. The Vanguard FTSE 250 ETF. Then got some Legal & General. I will just keep chipping into Legal & General because if we have a look at it, it's down almost 5%. It's well into its 52-week lows, and I think there really is some value in buying into this. It pays a nice tasty dividend of 9.47 at the moment because of the price that it's running at, and as you can see, it is down towards that low end of its 52-week range. I've got a bit of money also in National Grid. That's the first company on this whole list that is still a little bit in the green. National Grid also down towards the low of its 52-week range, and it has a nice little tasty dividend yield of 5.65%. If you are finding value in any of the content that I do, I would love it if you could like, subscribe, and drop a comment down below of the kind of content that you would like to see me creating over the next few months. Lloyd's down about 6.5. You've then got Primary Health Properties. This one I am probably going to buy a little bit more into. I quite like the price that we are at the moment, and it's just a little bit below my average price. But what I quite like about this is 7.66% dividend yield, and that is paying me quarterly. Then we have a look at my second best performing stock, which is Rio Tinto, and that one is also coming in with a pretty nice dividend yield of 6.17, and it's one of 3 different miners that I have within this portfolio. My best performing stock at the moment in here is GSK. I quite like GSK, even though it's only paying me 3.82% of a dividend yield. It is another one of those quarterly dividend payers, so I quite like seeing that money coming in at about that 1% of dividend yield per quarter. And then my previously best performing stock was Taylor Wimpey. I did buy a little bit more of this last month, hence why I've now sort of leveled off some of those great gains that I had, because originally I had that coming in at about 101 pence per share, but average price now sat at 106 and still up by almost 4%, so I'm reasonably happy with that. We then come into Anglo American and Glencore. Both of those miners are slightly down at the moment. Potentially might buy a little bit more into Anglo American as it's down about 6% at the moment. You can see that it did do a bit of a rally earlier on in the month. So in the end of the first couple of weeks, it was at a reasonably high level, had regained much of the losses that I'd seen on that, but it has dropped right back down and down 7.5% at the moment. One that I might buy a little bit more into is Greencoat UK Wind. I have a little bit of money still left on the side, so I might buy into this as it does have its quarterly ex-dividend dates coming up on the 9th of November. We have DS Smith and Vodafone only sat in around 2.4% down, relatively happy with that. And then looking at Intermediate Capital Group coming in at 2.5% up. I may start to add a little bit more to that because that's one of my smaller holdings, and linking that in with IG Group across that sort of financial side of things might be a good way to go, just to give me a bit more coverage within that sector. And then Sainsbury's, if that one comes back up again, I will potentially just sell out of that and redistribute across into some of the others. And then the Own the World, I haven't put any more money into this one. All I do is literally I just reinvest any of the dividends, and surprise surprise, those 4 ETFs that I invest into, exactly the same weighting as the daily DCA and the monthly DCA. I'll just let that keep running and keep growing. Sat at this one is my best performing pie at only 1.24% down. That's basically what I've been up to over the last month. I'll also do a quick video that talks through some of the dividends that I've got. It's been a relatively poor month for the dividends. I think I've only had for dividends for this month, it's just been a little bit over £70, and actually it won't be quite as much of that because I do have to pay the withholding tax on my realty income, so I lose about 15% of the realty income monthly dividend that I get, and that's up at close to the £30 per month, almost there on managing to buy one extra share of realty income per month, and that would be something quite nice to do. But why don't you go and have a quick look at this video that talks about some ETFs that you could potentially buy into. And thanks very much for watching, and I will see you in the next one. Cheers, bye.